Lost in the stock market, picking the wrong stocks over and over? No time to research or just starting out? Still dreaming of financial freedom? Then stay with me, because today I've got a stock you really want to see. Hi everyone. In this video we're going to take a closer look at a company called Capital Southwest. Together we'll try to answer the most important question: is it worth investing in or not? Founded in 1961, Capital Southwest is an internally managed business development company that invests in middle-market companies. It primarily provides credit and buys equity in companies across diverse industries like industrial manufacturing, healthcare, and technology services. The firm invests in growth financing, acquisitions, and buyouts, usually through various forms of debt and equity. Capital Southwest prefers non-control investments and often partners with other investors to strengthen its investment strategies in North American companies. The starting dividend yield is currently 10.88%, while the 5-year average has been 9.82%. The price-to-earnings ratio stands at 9.2 compared to a 5-year average of 9.3 and a current sector average of 11.6. The expected price range is between $21 and $26, while the current share price is $21.34. Based on these figures, the company appears to be fairly valued at the moment. Capital Southwest's next dividend payment is scheduled for June 30th. To be eligible, investors must have purchased shares no later than June 13th. This will be the last time the company pays a larger quarterly dividend. Starting in July, they will switch to a monthly dividend schedule. In addition to the monthly payouts, special dividends will continue to be paid on a quarterly basis. Over the past 10 years, Capital Southwest has increased its dividend by an average of 27.7% annually. In the past 5 years, the average increase was 7.6%, and the most recent raise was 3.1%. This shows a clear downward trend, but given the current high starting yield, that's not surprising, nor should we expect significantly larger increases. That said, the dividend does not appear to be at risk at this time. Companies like Capital Southwest typically distribute a high percentage of their earnings as dividends. Currently, the payout ratio has been near the upper limit for several years, but they've generally managed to keep it just below that threshold. Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions, and never base a financial decision solely on the content of this video. In the long term, there is an overall upward trend here as well. However, the most recent full fiscal year performed worse than expected, and based on the forecast for the next 12 months, this short-term downward trend is likely to continue. This chart also shows that revenues have currently declined, but it's difficult to draw far-reaching conclusions based on just 1 or 2 weaker financial years. Capital Southwest, like other BDCs, continuously issues new shares to raise capital more quickly. This is completely normal for companies in this sector. Return on equity has been quite volatile over the past few years, which isn't the most reassuring sign. However, on average, it has managed to meet expectations. Return on invested capital has yet to reach the desired level, but the long-term trend offers some cause for optimism. The debt level appears to be slightly high, but it still remains within a manageable range. The interest coverage ratio also looks solid. The starting dividend yield is currently 10.88%, with a recent increase of 3.1% over the past year. In addition, special dividends are paid out quarterly. The dividend does not appear to be at risk at this time, making the company fairly valued at its current price. Thanks for watching, and if you found value in today's video, give it a thumbs up and consider subscribing for more smart, long-term investing ideas. Stay patient, stay consistent, and keep building your path to financial freedom. Until next time, take care and happy investing.